Hi, my name is Crystin Martin, and this is my Bloomberg project. We had to do a ratio analysis based on a specific industry and decide which company would be the best to invest in. I decided to do the oil and gas industry, with my companies being Plains All American Pipeline, Spectra Energy Partners, DCP Midstream, and Kinder Morgan Inc. The first ratio I decided to analyze was the current ratio. The current ratio is a liquidity ratio that measures a company's ability to pay short-term and long-term obligations. The formula used to calculate a current ratio is current assets divided by current liabilities. As you can see, all of these companies have a current ratio of less than 1, which means that none of them really have the ability to pay its obligations, but DCP had the best at 0.49, which is the closest to 1. Next is the equity multiplier, which is a straightforward ratio used to measure a company's financial leverage. The formula for equity multiplier would be total assets divided by total equity. SEP would have the best because it is the lowest at 1.79, which I feel would reflect the lowest gains or losses on a profit margin, which would really show you the company's true profit. Next is the time interest earned ratio. This is an indicator of a company's ability to meet the interest payments on its debt. The formula for times interest earned is the EBIT divided by interest. SEP had the best at 5.23, which means that SEP has the ability to pay its interest obligations 5.23 times. Next is the ROE, which is the return on equity. This shows how much profit each dollar of a common stockholder's equity generates. The ROE is considered to be one of the most important ratios since it measures the return on equity, and the goal of finance is to maximize shareholders' wealth. PAA had the highest at 7.96, and the ROE is calculated by net income divided by total equity. Next is the profit margin. The profit margin usually refers to the percentage of revenue remaining after all costs, depreciation, interest, taxes, and other expenses have been deducted. SEP's profitability is impressive at 45.13, and this is really high considering it has the lowest average equity multiplier. Next is ROA. ROA is an indicator of how profitable a company is relative to its total assets. ROA can be calculated by net income divided by total assets. The SEP had the highest at 5.6, which means for every $5.60 in net income, it has a dollar's worth of total assets. Next is the total asset turnover. Asset turnover ratio is an efficiency ratio that measures a company's ability to generate sales from its assets by comparing net sales with average total assets. The total asset turnover can be calculated by sales divided by total assets. PAA had the best at 1.43, which means for every $1.43 in sales, it has $1 worth in total assets. Next is the market to book ratio. This is used to find the value of a company by comparing the book value of a firm to its market value. For firms, a good ratio would be between 1 and 3. Anything over 3 would mean that the stock is overvalued. DCP had the lowest at 1.19 and PAA had the highest at 2.13. Next is economic value added. This is an estimate of a firm's economic profit or the value created in excess of the required return on the company's shareholders. All of the companies here had negative values, with PAA being the highest at negative 57.56, and KMI had an extremely low economic value added at negative $3,561.89. So PAA's is the best because it is the closest to zero, which would be the break-even point for the required return of the company's shareholders. Next is the PE ratio. The PE ratio can be found by price per share divided by earnings per share. This ratio is good for valuing a company that measures its current share price relative to its price per earnings. A good benchmark for a PE ratio is 15 because if it is too low, it signals that the company may be undervalued, and if it is too high, it signals that the company may be overvalued. SEP has a PE ratio of 13.76. This means for SEP, for every $13.76 of share price, the company is earning $1. In conclusion, Spectra Energy Partners would be the best investment out of Plains All American Pipeline, DCP Midstream Partners, and Kinder Morgan Inc. Though SEP did not perform the best in every ratio that was analyzed, it was the best in the ratios with the most weight, especially because its profit margin is extremely high. This shows that that SEP has a lot of room to grow, even though its current ratio is very low, and it shows that the company may not have the ability to meet its obligations in the future. If they take the right steps, they can be highly a really good company to invest in the future. Thank you.